History tells us that the next 2 to 3 months are going to be incredibly important for stocks, commodities, and cryptos. So, what do we do next coming into the CPI numbers this week? Well, some people believe we're going to move up over 100 points. Others believe we're going to crash if the numbers turn out bad. We've got one chart in today's video that everybody needs to be watching, including investors and traders. Also, what about stocks and cryptos? Well, what's the similarities between this and 2020? We'll be talking about the crypto cycle that everybody seems to have forgotten. And then last but not least is the current technical analysis of markets. Where are we? We saw an island gap up and down, and we have a potential turning point. But really, inflation numbers are going to break certain key zones that are going to make it very possible to move to what we call the next level of equilibrium. Join us as we look at all the levels together right now. Well, welcome back everybody to the Daily Show where we talk about markets around the world. We've got the latest macro, the latest leading indicators, and of course the hottest charts coming your way. Let's begin by discussing a little bit of the sneaky that probably the Fed's been doing in the background. And this is what we call the shadow liquidity, which continues to prop up some of the market action. This is the code if you have a Bloomberg terminal. And basically we'll go into this greater detail in the next video that we put out. But more importantly, you can see the synergy between it and the market, especially over the period of March. Now, when did all of this shadow liquidity start to appear? Well, you guessed it. Yes, the March crisis brought this in. And a lot of people are speculating that this is a huge component of why the markets are up over this period of time. Let's also discuss bears unwinding their equity bets. Similar to 2020, we have markets that have just absolutely destroyed bear shorters. And I mean not just retail traders. We're talking about some of the biggest commercial hedges in the world have unwound a lot of their shorts. And this is very symptomatic of what we saw back in June into September of basically the period of rallies that we had through tech. Guess what happened in August and September though? The market fell after this great unwind. Sound familiar? Well, it should, because it's happening at almost the exact same time in the markets with the exact same types of pressures being put on stocks. Is that a coincidence? Probably not. If you're not aware already, the NASDAQ 100 index will have a special rebalance effective July 24th. So if you see unusual volumes around that day, and don't be surprised, we'll talk about this more in an upcoming video, again with that dark liquidity and whether we think it's a big deal. But July 24th, mark it in your calendars, that will be a special rebalance of the NASDAQ, similar to the one we saw recently in the Russell 2000. For investors on the channel, do we like the markets right now? Well, looking at the averages, 19.13 according to JP Morgan's asset report here, we can see the forward PE is a little bit too high, and it's getting closer to one standard deviation away. Does this mean that markets can't go up more? Absolutely not. But what it does tell you is that if you're patient enough, and if you're a very patient investor, kind of like a Buffett, you generally get a better price at some point in the future in terms of forward PEs. What about earnings week? Can this bring us the best prices? Well, as we know, 2 to 3 months is generally the weakest point in pre-election years. And we're entering that into next week / right where we are right now. We see a rally generally to around the 15th of the month to the 20th, and then we see a huge sell-off that usually happens after that. Will it happen again in 2023? Most people don't bet it is, which means it's probably more likely it's going to happen. But of course, we'll probably see this either off the CPI number that comes out on Wednesday or the earnings reports from the banks. And what we're looking for specifically with the earnings is forward guidance. So let's go through some of the things that are going on in the macro universe, and specifically let's talk about yields. Higher for longer with less rate cuts. Does the market care? The answer is no. At the moment, it doesn't. What we're looking for is the fear of the unknown. Put the US 2-year chart, which we'll be looking at later on in today's video, on your charts this week and set alerts for new highs. If that happens and it starts accelerating, the bears will be in control of the market. At least that's my guess. The next thing is if it starts to get crunched and it moves down, the bulls should be very happy with that and probably will be moving it forward. I was reading a lot of reports over the weekend, and I can tell you that almost all of the big banks are reporting the US 2-year significantly over the last 2 weeks, and it just kind of crescendos to how important this chart is this week for not only the bank economic data, but the inflation reports. What about sentiment reports? Well, we all know that every retail trader is now incredibly bullish, and this is usually boded kind of poorly and given us usually a mean reversion moving forward. We started seeing this about 4 weeks ago, and really a lot of the big tech has been actually semi-lackluster since that point. What about unusual volumes though? Well, last week we reported a couple of dark pool volume reports, and this is an interesting one, a read of dark pool that we haven't seen for quite some time here on the VIX. So last time we got a read like this, we saw the VIX actually drop off. Well, we've just seen the VIX get a dark pool read. It could be a sell, but in general, at these levels, you'd have to think that a bigger player is considering that they might be entering into the market. This is similar to one of the dark pool reads that we saw last week. We reported on it for Russell 2000, and you can kind of see the result since then. But again, it is now at what we would call considered supply or resistance. So will we get another big read over the next 24 hours from the Russell? If we do, well, we know what they're probably going to be doing. They're probably going to be selling it at this point, taking some of those profits from that large, what we now know is most likely a buy last week due to the price action. Bitcoin halving. I want to talk about this cycle. Too many people probably ignoring it, but I think the synergies are here. Now, this is an older chart, so we're actually trading around this point right now, but take a look at these similarities. Ignore the left-hand side. We've used this chart many times. We know that those numbers are stupid. But what we do have here is we have a period of time where we've actually found the bottom at almost the exact same period of time that we always find the bottom. We've ramped at almost the exact same period we always ramp, and we're declining / going sideways at this point. And this is traditionally what happens into what we call the halving event. Here's another chart that maybe shows it a little bit more clearly of where we are right now with an update and what tends to happen next, which is a sideways market, if not a slight decline. I think, though, coming into this, we cannot ignore that if the NASDAQ goes and keeps running off and we are in a new bull market, where could the opportunity be? Well, it could be in crypto, because crypto is kind of like a hyperstock. And if a hyperstock start running similar to what they did in 2021 again, which they haven't really been recently, they've kind of been floating around, then all of a sudden, well, you can see where percentages could lie in these markets. Coming into July, we know that we have an interest rate hike, at least 94.2% probability of an interest rate hike. Remember, September is currently getting 21% for another rate hike. So will we see two so quickly together? Some people, or at least the market odds, are starting to look that way. Let's now look at the history of what happens next. So we're in a pre-election year, and this is just some of the strongest years on record for the first half. And what happens in the second half is often, let's say, up, down, and all around. Traditionally, it's usually kind of up in the start of July, down in the middle into October, and then it gets this really nice run. And we can actually show you what a pre-election chart looks like. Here I've got a copy, and this will look different to most other people. So make sure to subscribe if you're interested in this type of stuff, because we always go through it together. So the data would state that we usually hover in July. Does that sound familiar? I think it should, because we're actually hovering at this state. Then we tend to sell off into August, then we kind of flatline for a few months, floating up and down. Maybe we mean revert, which is going back to the 20 moving average, and we'll talk about that later on. And then we get this nice ramp that happens. Now, does it look familiar this year? Very close how the S&P looks, and the NASDAQ's even closer. It's more percentage, but certainly looks really similar. And this is what it looks like when you go to the trade days of pre-election years versus the rest. Again, we get into those 10 to 11 trading days, we tend to see the turn point. We're getting close to that right now at the time of this recording. Let's go and look at fear and greed. We're in extreme greed here, nothing new. And if we go through the options traded through Monday, you can see again that it's more of the same types of things that we're running. Everybody's on a couple of stocks at the moment, and one of those tends to be Rivian. Everyone asked about it yesterday. Unusual options activity. It was mad on Friday. Still huge amounts of calls. Someone will get massively burnt on this stock. The question is, can you get out of it fast enough? It's just like any of these other pumps. They pump and then they will dump and bring back, a lot of that percentage. The question is, can you be the one that gets out fastest? Definitely gambling when you go for that type of position. What else do we have here? Well, we had some nice moves through some of the stocks we've been talking about recently. Zoom recovered a little bit. We also had PayPal as well, finding some strength. But I think the thing that's notable here is as we scroll down, 59% of all the transactions on the Monday were calls. So again, it continues to be that puts are not being purchased in this market in comparison to the shorter date calls. And when we go over to the calls and the puts, you can see here that most of them were all shorter date. And then all of a sudden we get one for IWM, which is here for September. And this is a pretty big put being entered into the market. And this comes along with many unusual flow puts that we've started to see appear for September and also for 2024. Could they be hedging the market? Most likely they are. But I think they're also putting in a bit of risk management moving forward into the weakest period of time. We've seen a lot of these kind of like the 10th or 15th biggest read trades for the day being longer dated puts on the major indices, whether it be the Russell, the Qs, or of course the S&P. Let's go through rotation. What have we got going on with rotation? Well, it's pretty much everything to do with higher interest rates, clean energy, REITs, metals, energy, financials. They were the ones that did the best on the day, and defensives were not doing very well. Tech also suffering quite heavily as we saw a massive rotation to RSP, but more importantly, the Russell 2000. Here is the chart of the last 5 days, I think, or maybe this is the last day. But again, same type of thing. Inflation numbers coming through very, very strong from the yield perspective, which is helping metals, energy, and some others. And I think that they could have some further bursts if we get a good or a very strong inflation number, which is not going to be good for the economy, but it's going to be very good for rates. So just before we jump into the charts and we take a look at all of the key levels that you should be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you're from Australia or New Zealand, you better listen up, because at the moment, not only do you get all of the extra bonuses in the descriptions down below, but also you'll get $50 worth of my favorite share in the market, which is Microsoft. There's also a bunch of special offers for New Zealanders as Tiger Brokers enter the market. Now, for everyone else around the world where Tiger Brokers have the platform, let's take a look at why we like the platform. And this is helpful to anybody really setting up anything. If you want to set alerts, you can do so within the platform. It's such an important technique. We always talk about patience, react, don't predict. How do we do that? Well, we set a damn lot of alerts. And there are days when I've got over 100 alerts going through on my charts because there's so much opportunity on those particular points. One-click trade, level 1 and level 2 data within the platform, analysis of all of the greatest economists around the world, and of course what they think is going on with the markets moving forward in terms of price targets. And on top of that, we can click more. And for the boffins that like spreadsheets, PE ratios, and everything else, you can literally click through the financials, short interest, filings, summaries, fundamentals, everything's here within the platform. So what are you waiting for? Check out the special offers in the links down below, and that helps to support the channel as well. Thanks so much. All right, let's get into the charts. We'll start off here with Magma. Did we see it start to sell? The short answer is yes, we did. We actually got a new low over the top of the doji from the previous week. And if we go down to the daily, you can see here together that we haven't quite made a new low. So we're looking for probably underneath 1036 to kind of solidify that we might have a first time frame trend kind of change, and that we might actually be starting to see some weakness. At this point, it was just 1 day off of weakness. RSP, or equal weighted markets, for bulls, you'll be pretty happy with yourself right now, because the market's actual rotation is starting to get a bit stronger. And what this means is that we're starting to see breadth re-enter the market, similar to what we had with the January run. Look at this, breadth is coming back. RSP outperforming the market over the last couple of weeks in terms of seeing that rotation. Now we've got high yield bonds. Did they drop? The answer is no. If they had dropped, that would have been a big deal. So they came with the market on the day, no information being given to us from the junk bonds. Treasury is getting pressured. A lot of people asked about this on the Monday stream, which we do every Monday. We do an open stream free. If you're interested, then of course, check it out. Links in the description, and also, of course, subscribe and smash the like button if you like that type of stuff. But here we have TLT, and what this is telling us is that we might be going towards new lows. Now, if you've been watching for a while, I am a bull on treasuries, but I do think that if yields keep going up, you've got to not ignore the fact that treasuries will fall, and there's possibility of our long-term lows. Set alerts for things like 96, set alerts for new lows underneath here. And if we got a new low and then we rallied past 104, I'd be an ultra bull on treasuries. So we'll pay attention to this a lot. I'm really liking where treasuries are trading right now, even though you might think, well, if you're partially bullish here, why would you like it trading down? I just think it's the right type of move for it to be doing. So we spoke about unusual activity on the VIX in terms of people buying or selling, but we can only assume it's probably a buy of the volatility. Now the VVIX is also showing us underlying. This is like the volatility of the volatility. It's showing us underlying volatility in the markets. Well, here it is. It continues to stay elevated into the CPI and the earnings results. The skew got crushed over the last 24 hours. That's good for bears. So again, if we see bearish pressure this week and we get more skew crush, that's definitely a thumbs up for bears. If we move over to PCC, the put call ratio, you can see this has remained heavily on the call side, which is again pretty good for the bears. If we get price action that way, you think of those as kind of like counter logic in many ways. If everyone's too bullish or everyone's too bearish, you kind of want to go against it. If you see the price action, kind of like confirm that action here. Now, outside of the dark liquidity or the dark pool kind of stuff that the Fed's doing, the secret liquidity, we can see here the normal traditional one that most people watch is massively disconnected from the markets. And maybe that can explain why we're seeing a disconnected market. But at the same time, this still controls a lot. And it has had a little bit of an uptick in the last couple of days. But in general, massive discrepancies coming into this week's inflation report. And now we move into the chart that we should all be watching, the US 2-year. I believe this chart's pretty important. I've seen it floated around a lot, as I said, by Goldman Sachs, Morgan Stanley, JP Morgan. It doesn't matter. Everyone's talking about it. And that doesn't mean all retail traders are talking about it. I see everybody else talking about it. Acceleration is the key uncertainty that we're looking for in markets right now. So we're basically hoping that if you're a bear, you want this thing to accelerate through after inflation, make a new high, and that should bring down markets. Now, if that happens, that's going to be good for bears. If this starts selling off, watch out, because that's probably going to mean that the markets are going to a new high and possibly we hit a 45.30 on the stock market. Let's have a look at oil. Oil trading around these highs. You can see here it's getting ready, I believe, possibly for a breach out. I've seen a few internalized reports saying that certain energy stocks look like a good short-term trade. And I think the positivities are OPEC, which of course cut. And then the other positivity is going to be US 2-year. If 2-year yield spikes up above, expect oil to start flying. If it doesn't and US 2-year comes down though, the general period of time we're in is actually weak for oil. So where do we find ourselves? At the high, ahead of big news. Next move, if it does move up, could be around $77 a barrel. So oil back in focus this week. The dollar is getting trashed, and this is a big deal. Now, every central bank around the world is raising rates. Now, why is that important? Because all things are relative. Yes, the Fed is going to raise rates, and the market reacted to that already. But now we've got the ECB, the Bank of England, the RBA, Bank of Canada, all these other banks are raising rates. So comparatively, the dollar is getting crushed a bit, and it's about to make a new low. Now, it didn't quite hit our high here, but what I liked the idea of, and I was saying this in the stream last night, was that I really want to see a rally into a short. I am bearish on dollar now as of the break that happened here. That was pretty much what turned me bearish. I would like to see a rally, but the problem is the way it's traded now is you don't really want it to rally back above here. Inflation will be the pusher. We'll be watching dollar index very closely this week. At the moment, it's in demand, maybe a little bit heavily sold here coming in. I could still see rallies coming off this level as scalps and day trades. So watch that with the euro. Gold struggling either way. Supply can't get above. Demand can't get below. Stuck in a range. We will follow gold. At this point, we don't know which direction it's in. So you're basically just trading a channel. I expect that to change this week later on. Let's move over now to Tesla. So Tesla opened and then it sold. It's a bit unfortunate because I was hoping it would kind of just float round up here and then gap down one day or just keep rallying up to 300. But instead it gave us this. So what we're looking for in Tesla is it's got a gap up. It's got kind of like an island. It would need to gap below with a pretty big sell-off on the day to really give us a stronger signal towards it going bearish. But I would stuck in neutrality at the moment. So, trend is up. So therefore you'd be more bullish than bearish, but absolutely no triggers either way. And probably the only thing you're looking for at this stage, if you're a bull, is maybe some kind of gap fill. Semiconductors sitting around in the middle of nowhere. They rejected, then they moved back up. This is going to be all about inflation. We'll come back to semis later on. ASX 200 struggling. It moved below. Couple of wicks. I'm looking for the ASX 200 to go towards 69.50 for all the Aussies out there. I've been very negative on this market. If oil does improve, though, this week due to yields, the ASX may actually bounce. So be very, very cautious here with sells. Inflation numbers will be very important. But 69.50 has been a zone that we've been looking for. And we got down to 69.99, so basically 7K. We're about 50 points off that. For the DAX, it looks like it's done a Wyckoff. And a lot of people have been sending me this chart, which is good. Thanks very much for sharing it. And I do see it, though, on this one. Buyers climax, UT, and, of course, the sell-off that happened. Now, it went underneath this low, which I think is important. And now we're looking towards rallies and potentially shorts. So this is coming into a nice rally short opportunity for the German market. It's at all-time highs with the ECB doing a double taper this month, which, yeah, maybe people know, but they're doing that, and probably a nice rate hike as well. When we go over to the Dow, that's supply or resistance. Everyone can see it. Double top potential, absolutely. Have we got a new low? No. Could this be a catalyst? Yes. We'll watch the Dow this week for sure together. It's a big zone. US 2000, strong market. This thing's been beast mode. Now, we saw those big purchases. Are they going to take profit over the next 24 hours? Well, we know where we are with the most traded zone. Let's see whether this thing breaks out or not. But for longer term investors, I think that there's fair game in basically looking at the Russell and saying, well, it's been rebalanced. I think it got rebalanced in June. There's a good chance that this is basing off if we believe we're in a bull market. It's better than the damn NASDAQ right now in terms of what generally happens at this point after a recovery. However, I'm not discounting the fact that this could sell right here, right now. I mean, the market is literally at the most traded zone. We've seen this level be hit quite a few periods of time. S&P, we already talked about this, but the key levels are going to be a new high break, a new low, 43.84. 43.84 should bring 43.37 and the gap fill down here at 43.27. If we then get underneath, we'll create a double top. The formation would push us back into 41.80-ish, which is so dangerously close to our most traded zone for the last 2 years. So basically, I'm kind of thinking that if this double top forms, we're probably moving towards 41.50, 41.60 at this stage. And if we're going to go bullish, we'll see it through CPI. We'll breach out above this zone here, 44.40. Everyone that's short here will get squeezed. Stop losses should be hit, or risk management should hopefully be hit. And then maybe Tom Lee will be right and you get a 45.30. We're going to be patient and react to a news result like this. I think that the inflation number will show us the big moves, though, and it will give us everything we need to know. The Friday was interesting, and it just shows you being patient is good. You got the reaction to the non-farms, comes up into the previous supply, and the previous support becomes resistance area, then sells off. That's the essence of patience. You wait for the market to come to your zone, and if it hits your zone and it does it during news, well, you can be more, okay, well, I see what it's doing there. If you're a shorter in the markets, this is kind of the point where you think it should short. You can see here a lot of trade volume. It then made a new low, needs to short off in here. If it makes a new high, that's going to be super strong for bulls, and I think they'll push it through. So a lot of big zones coming up in the next 48 hours on this market, and certainly worthwhile watching. For the NASDAQ, it's similar, same thing. We got new lows, we haven't got new highs. A break above here is going to be a big deal and shoot it higher. But at this stage, the bears are in control of the shortest timeframes, and the bulls are in control of course, the longer daily, weekly timeframes at this stage. Let's have a look at Bitcoin. It looks boring on the surface, and it is. It's stuck within a range completely. But if the NASDAQ goes off and starts becoming ballistic, I wouldn't discount the fact that Bitcoin could be like a hyper stock. We saw before the halving cycle. We'll look into it more in the future. But get your head around that concept, because I don't see how it's broken. It seems to be trading the exact same way it always has, and it even bottomed at the exact same time that it always has. So coincidence? Probably not in this case. Let's move over to the news for the week, and it's a bunch of central banks around the world. CPI data coming out 8:30 a.m. New York time, and then we keep scrolling down here, and we get the PPI, which is super annoying. And then we get the prelim UOM. So basically, we've got three bigger bits of data, plus we know that we have the other bit, which is the earnings season coming off. If you're interested in the sponsor of today's video, check them out. Links in the description down below. And of course, if you enjoyed today's video, subscribe, smash the like button. We'll see you in the next one. Thank you so much, everybody. Bye for now.